Hi, y'all. This is Javon Abernathy. I'm a licensed life insurance advisor. I service a lot of parts of the United States. I get asked a lot of the same questions, so this again is Ask Me a Question. Today we're going to be talking about the different types of life insurance. So I chose 3 different types because there are a lot of products out there. So if you ever are a first-time buyer of life insurance, you're usually going to deal with 3 different things. One is term insurance, the second is whole life insurance, and the third is going to be an index universal life insurance policy. So let's start with the term insurance. Term insurance, exactly what it sounds like. It lasts for a certain amount of time or a term, usually 10 years, 15 years, 30 years. People typically use it to pay for their children's college, pay for a mortgage. It's great because you can get a lot of coverage for very affordable considering, but you do have to have good health for it. And once that 15 years or 30 years ends, it's pretty much over. So you'll have to get started with the new policy. Going on to whole life. So whole life, exactly the way it sounds. It's meant to last you your entire life. Most people like that to cover debts. They also really like it for final expenses because they want it to be around when people would normally naturally die of old age into their 80s, things like that. So whole life, usually it's a little bit more expensive. People tend to get smaller amounts of it. Good thing about it is that if your health isn't completely stellar, you would more than likely qualify for a whole life policy. And also it has a little thing called the cash value that builds up every time you make your payment. And they basically stash a little bit of that into a savings account for you. Over time, that accumulates, and you might be able to find a few $1,000s in there. Say you need some cash for a rainy day. Don't forget to look into your whole life policy. The third policy type of insurance we're going to talk about is the index universal life insurance. People use this as more of a amped up cash value is what they're looking for. It does come with a death benefit, so if you die early, then it will pay your family out. However, what people really want is that cash value to build up. Every single time they make their payment, they get that money put into a savings account, which builds and expounds and expounds. So sometimes if you've had it for a long enough time, your cash value may be greater than your death benefit. People have used IULs or Index Universal Life to fund starting a new business, buying a home, vacations. Also, it could fund your retirement. So those are some really great things to have if you're able to qualify for it, because your health does have to be a little bit more stellar. So I think that's a great stopping place. Obviously, there's so much more to talk about, but we'll just do it in little bite-sized pieces. So y'all have a very great day, and I'll answer your questions next time. Bye.